So let's get started. Hello, everybody, and welcome. This is Daniel Wynn, and I want to welcome you to today's webinar called The Private Lender's Edge, How to Earn 8 to 12% Interest, Lending Money to Real Estate Investors, secured by valuable real estate and without having to pick up a hammer. So if you want to learn, if you've ever thought about learning about private lending, you're in the right spot. If you're already a private lender, I hope I could share some information with you that is valuable to you. And if you're thinking about becoming a private lender, then please stay for the whole webinar because I'm going to tell you what it takes and how we could teach you how to get started and how we could work together. This is a great time to be a private money lender. Banks are paying less than 1% on most CDs that are available. I just went online and looked today. So depending on the length of time, there are some places that are paying greater than 1%, but you have to lock up your money for 1 year or 2 years or longer. As a private lender, by the way, you're lending the money to the bank to earn the extra 1 or 2%. So you're lending the money to the bank, and they're going to give you 1% or 2%. As a private lender, the way that I'm going to share with you, using real estate, investor real estate as collateral, I'm going to show you how you can earn 8 to 12% interest annually on your money. That means your money will work as hard for you as you work for it. So who is this webinar for? This webinar is for anybody who has thought about becoming a private lender or is a private lender, whether you're a passive investor, a mortgage investor or trust deed investor out on the West Coast, or your family office. It's for individual investors seeking yield with security and diversification with their current portfolio. My goal for this webinar is to help the people who want to put their capital to work to learn what I call the private lending edge and create high yields for the money they lend out. My goal also is to help people who want to create reoccurring monthly cash flow for themselves and their family simply by funding real estate investor deals without lifting a finger. And also to teach investors how to be great private lenders without worrying about having to take back a property through foreclosure or the collection hassles that are associated with lending. The Private Lender's Edge Investor Program Overview is really quite simple. We find, or you could find, investors who want to borrow money with their real estate. And we underwrite the loans and we present them to our investors or we fund them ourselves. And these investors are borrowing the money to buy property for the following reasons: to either remodel and sell it, remodel and rent it, or for other investments. You have the opportunity by becoming a private lender secured by real estate to earn 8 to 12% on your money. It's really that very simple. Think of it like you would like the bank CD, but better. So who are private lenders? Private lenders are individuals or companies who lend their money from their investment capital or their retirement accounts. You are not a partner. Each one of these loans that you lend on, you are the owner of the note. You are the only investor or lender on the note, typically. I mean, there's always exceptions. You could bring a brother-in-law, a friend in, but typically it's you would be the lender of record, recorded at the county recorder of deeds office. So a private lender could be you, your company, your retirement account, or you and your brother, or you and your sister, or you and your best friend. Who is Daniel Wynn? For those of you that know me, hi. Thank you for joining the webinar. For those of you that are not familiar with me, let me give you a little bit of background. So I've been in the private lending business for over 30 years. I've been a traditional mortgage broker, traditional mortgage banker, but in the last 12 years, I've specialized in private lenders working with real estate investors. I've funded over $400 million in mortgages and counting. I've helped private investors, that's who we're speaking about, right? Private lenders earn 10% annual returns for the last 12 years. I also am a distressed property acquisition specialist who has bought and sold over 100 properties in the last 7 years. And I learn a lot by being the lender. I see what many investors do wrong, and I see what the good ones do well. And I use that as I stick that into my own AI, right? My own artificial intelligence to make good decisions on which properties that we're going to acquire. I'm also a loving father and husband who has two little beautiful girls they're my why that I'm working for. And I love to travel with them and live a happy, healthy lifestyle, and so much more. We can talk about that in the future. So why work with Dan? As I said a minute ago, I have over 30 years experience in lending, and at least like to share that experience with you on choosing the right properties and borrowers that qualify for loans. Because if you just get started in private lending, you're going to get loan requests. And I'll tell you, somebody asked me this week or last week, in the past week, how many deals do we turn down before we accept one? And I said somewhere we probably turn down 7 to 9 out of 10, right? So we turn down a lot of loans. Now, granted, some people call and they really don't know what they're doing. They have no money to invest. So that's an automatic no, unless they own some other unsecured, and they own some other property that doesn't have much debt on it. So you're going to benefit from my 30 years experience of underwriting loans. I find solutions for everyday problems, and I try to make sure that those problems don't end up on your desk. We have some of the best closing documents out there. They've been updated over the last 12 years. We've had some of the best attorneys from coast to coast, from New York to California and everything in between, that has reviewed them. We've tweaked them. We've battle tested them, and we could share them with you. So we're going to teach you how to protect your decisions of lending and how to choose the right properties and make sure you have the proper property insurance and title insurance to protect you. People who borrow from private lenders are typically real estate investors, mom and pops. Sometimes they have the properties in their individual name. Sometimes they have an LLC. Sometimes they have a series LLC. Sometimes they have land trusts. But most of our investors are mom and pops. Now, some of them own 1 or 2 properties, some of them own a dozen properties, and some of them own a lot more properties. We do work with some commercial property owners, and we're very choosy on which commercial properties that we get involved in. And we like to be at whichever one of these you're going to learn here in the webinar. We're always going to use conservative loan to values. So private individuals, real estate investors, and we get a lot of realtors who like to invest, and contractors, home improvement contractors that also are buying properties to fix up and sell. What is the ideal target loan? We like residential loans, as I just said. I mean, we can do a commercial deal, but it's really a rarity. Our specific loans that we go after, our primary market is the state of Illinois, the Chicagoland suburbs and counties, and then we stretch out. I can send you, if you want more information about what other states we do outside of Chicago, I'd be happy to share that with you. But let's just stay specifically, when I lend in Chicago, I'm looking for 1 to 4 unit properties that are owned by investors. We don't do consumer loans, which are the people that live in the properties. We want the properties to have a minimum after repair value of $100,000, and we never loan more than 65% loan to value. Oftentimes, we lend less than 65. We don't do loans in rural or blighted areas. So let me explain how the loan process works. And I'm going to answer a lot of questions that you might have. So hopefully it was worth it for you to sit in on this webinar today. Basically, we get a phone call or somebody fills out an online application, and we speak to them, and we get them a loan application, and they apply for the loan. Once we get the loan in, first thing we do is we go online and we look at the comps. We want to look at the property, see what it looks like from the outside, use Google Maps, drive around the street, look at, do a 360 and see what the houses look like up and down the block. Then we go into our software to pull comps, and we see what properties have been selling for. We pull credit, and then we review their experience, if they have experience or if they're new, and we work with both. And then we review the loan request. Do the numbers make sense? They're buying it for X, they're rehabbing it for Y. They believe they're going to exit with Z, which is either selling or refinancing. And if they're refinancing, I have to look and underwrite the potential refinance. I have to make sure that their credit scores are going to be high enough and that they're going to qualify for a refi. So assuming all those are good and we like the deal, we'll put together a loan approval. If the deal is really simple, I do what's called an instant loan approval, and I issue it on the spot within hours. And loan approvals are written letter of intent to close the loan after we get the proper property insurance, the proper title policy and title insurance policy, and we have an interior inspection of the property, which could be an appraisal, a BPO, a CMA. And once we receive all those conditions back and some bank statements so we could verify their income, then we would issue a clear to close. And once a clear to close happens, we set a closing, or their attorney set a closing if they're using attorneys. And then we prepare loan documents for most of our private investors, but you could prepare your own or you could have your attorney, whichever is best for you. And then we wire the funds, or we have the investor wire the funds and close the loan. Once the loan is funded, then we set up loan servicing, and I'll go into what that means exactly, because you're going to love how simple and easy it is to service these loans. So where would you send your money? Let's assume that you said, hey, Dan, I want to move forward. I'm willing to put in $50,000 or $100,000 on a loan. I like this one that you sent me. I'm ready to move forward. Well, you're never going to send the money to me, or you're never going to send it to the real estate investor. You're going to send the money directly to a title company or the title company agent. In some states, their agents are attorneys. And they're the ones that are issuing the title policy, and they'll do the closing, prepare the HUD or the closing statement, and record the mortgage or trust deed. So we use a third-party loan servicer called FCI, which I'll go over in a minute, and they will ACH you the monthly payments when the customer starts making them. You'll have access to your account online, and then they prepare the 1099s at the year-end accounting. Can you use a self-directed IRA or retirement account? I have good news for you, and the answer is yes. I use this a lot. So you're able to use your self-directed retirement accounts to wire the money, have your custodian, or if you're self-directed checkbook ready, you could wire the money into the title company, and the loan documents will be made out as your retirement account would be the lender. Just like you would see, the big banks on the documents. If you borrowed money from a bank on your own mortgage or mortgages in the past, it'll have your name. So in my case, it'll be the Daniel Wynn IRA trust number for blah, 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 blah. And then that is the official lender of record, and the documents are prepared. And this allows you to take advantage of any idle money you have sitting in these retirement accounts. So what kind of documents do we provide, or should you have when you're acting as a private lender to secure your investments? In reality, there are two main documents are number 1 and 2. A promissory note where the customer signs and they're promising to pay you back, and a mortgage or trust deed, which is recorded in the counties. So the whole world knows you are the lender on that property. And because you use a title company, we're only suggesting that you make loans in the first position. You're the only loan on the property. We're not going to encourage you to do second mortgages. We don't encourage ourselves. We don't do them. There's always exceptions, but for the most part, we're talking about first mortgage position, trust deeds. We're going to show you and teach you how to make sure that you have the property insurance in your name or your entity's name, prepaid for 1 year, so you don't have to be worried about them missing a payment on the property insurance. We make sure the property taxes are all current. And then once again, you would get once you set up with FCI or whichever servicing agent you want, we would help you prepare the forms so that the money will go directly into your account. So once again, the loan servicer that we use or we recommend is FCI out of Anaheim, California. There's their website. They're the largest private money loan servicer in the country. What I love about them is that, all the loans that I have, I get emails almost, sometimes it seems like daily, but I get emails almost every other day, or when people make their payments. Some of our people, some people only want their payments on the 1st or the 5th. I got some that come in on the 15th, some that come in on the 20th. because I use 30 days from the date that the loan closed, and not I don't always push my loans to the 1st or the 5th. That's your choice. You can decide that. So I get these emails all the time saying, hey, we just made a deposit. Mr. and Mrs. Jones made their payment, and here, it just went into your account. And I love it because you can have access 24/7. You can go online and you can see exactly what's going on with each and every one of your accounts. So as I was saying, I love it because back in the day when I first started, people used to mail in their checks, and then we would mail out checks to the investors, and that was called mailbox money, right? You would receive your interest payment in the mail, and then you'd have to run down to the bank and deposit. Well, nowadays, because of ACH and the way the servicing software is set up, it's much simpler. You don't have to get in your car. You don't have to endorse a check. It basically gets ACH right from the loan servicer to your account. And so this is a simple way to earn email money. And this is what it looks like once you're inside, if you have an account with FCI. I call it collecting payments on autopilot, because at the closing, we have the customer bring a voided check, and we set them up on an ACH so their payments will be automatically debited on the proper date. And then you receive emails once you've registered this particular borrower with email, like on top, notification of electronic deposit. It says Freestyle Investments, one of my entities. Hey, we just made a deposit for $510.42. So I get these emails a lot. And once you have a lot of loans, you'll receive them a lot. And it usually puts a smile on my face. This other snapshot with the graphs is one of my accounts that I have with FCI. So it shows what's going on, how much interest I've earned to date, how much per month, and then counts that are what the status is on certain payments. So once again, this is very, very nice to be able to have all this information right at your fingertips whenever you want it. So I'm going to answer some questions that I get a lot from people that are just getting started. What happens if the borrower doesn't pay? Well, if you're in the lending business, no matter how good you are, you will have people that are slow payers, and some people that maybe don't pay at all, or you have to go into foreclosure with. I mean, that's the nature of the business. I mean, I've had some customers that have had some really good luck, 2 or 3 years where nobody had to go into foreclosure, and you just have some slow payers. And that could happen for you. Or the first deal you do could have somebody that's a slow payer. But here's the good news. I'm going to show you my golden rules about loan to value and how we keep this cushion in there in case that happens. But we have a default interest rate associated with the loans that can be 18% minimum or higher. So if the note rate is 12% and somebody wants to not make their payments, you're going to be able to receive more money for them defaulting. There's also late fees that you can earn, loan modification fees. So there's many additional fees that get earned when somebody doesn't pay on time. Now, let's say the worst thing happens and you have to foreclose. Well, in that case, if we loaned $50,000 and the property was worth $100,000, hopefully we could still sell it close to $100,000. Let's say we have to sell it for $85,000, right? So you were owed $50,000 plus the interest and the legal fees. Maybe you're up to $60,000. And then as long as you could sell it for $60,000, everything above that would be additional profit to you. Here's some frequently asked questions. Do you, as the private lender, incur any costs with lending your money? The only money that's usually that you would have to pay is for the wire fee if your bank charges you. Some people don't pay wire fees. And then FCI has a monthly servicing fee of $20. So it's $240 a year to service a loan, and well worth it. Once you get online and you see everything they offer, I don't think you'd want to live without it, because I haven't. I've been with them for a good 10, 11 years now. Another question I get asked is, what is the size of mortgages that somebody could begin investing in? Well, I've done as low as 10 and 20,000, but let's just for for today, let's say that a minimum of 30,000 to get started, and we do loans, a lot of loans in between 50 and 100, $250,000. And we do get a lot of loans for 30, 50, 70, because we don't try to lend them the most amount of money. We try to lend people what they need at a conservative loan to value for us as the lenders. And then here's another question. Are my funds in a mortgage pool? A mortgage pool is where you, your brother, the guy across the street, you all put your money in, you put in 10, 10, 10, 10, 10, 10 people put in $10,000, and they're all owners in this pool on one loan. We don't do that. We do individual loans, and it'll be either you or your entity, or you and your relative or friend. Better Way doesn't charge you any management fees. We earn our money through origination, otherwise known as points, for originating a loan, which is paid by the borrower, and we get a servicing spread. So if we charge the borrower 12%, you would earn 11 and 0.25, and we would get 0.75 over the life of the loan. What happens if my investment, if Dan retires or is no longer around? Well, I hope that doesn't happen for a long, long time, but you own these notes or mortgages. They're 100% in your name, and you will receive your investment money back once the property is sold or refinanced. So it's in your name. You could stop doing business with us for whatever reason you choose, but I hope that doesn't happen. Most people are pretty happy with what we deliver, and they stay with us for years. So here's the golden rule, and this is what saves us so much. As a private lender, you never want to lend more than 65% of the value. And if you can, you want to be under 50%. I have a lot of loans that are under 50% because why wouldn't I? I mean, I don't have to max out the loan and give the customer every penny that they want or the highest loan to value. I'm the lender. I get to make the rules. You get to make the rules. So if you don't violate this rule, you should always be in a good position if people don't pay on time. So let's go over an example of how much income you could earn. If you were to put $100,000 to work with an 8% interest note rate, that is $667 a month, times 12, it's just a little over $8,000 per year. If you had that money in the bank, $100,000, and the bank paid you a whole 1%, you'd earn $1,000. In this case, with putting the money to work in a mortgage or a trust deed at 8%, you would earn $8,000. So that's a $7,000 difference on your $100,000. And if you have more than 100 or 200 or 300 or 400, you could just keep multiplying that to get to the additional income that you could be earning every year as a private money lender. My biggest concern is the protection of your principal. I want to keep you around as a lender for many, many years. So I'm going to make sure that we choose the best properties and the best borrowers, and we have the best loan to values not exceeding the 65%. So there's two rules that you got to live by. Never lend higher than 65% loan to value, which we just went over. And number two is never lend on a property you would not want to own if you did need to foreclose on the property. So if you see a deal from a broker or somebody sends in and you go, I wouldn't touch that property with a 10-foot pole, then you shouldn't lend on it. That's your golden rule, and that's your prerogative as a private lender. So we just went over that. So how much money you can earn, and basically you're cutting out the middleman, right? Because when you leave the money in the bank and they give you whatever they pay you, they're lending it out to cars and houses and home equity loans and business loans. So if you had $100,000, you could earn $8,000 a year. If you had $500,000, you could earn up to $40,000 a year in interest income. So what's the next step? Now that I taught you some of the basics of private lending, if you'd like to learn more about how to work with us, send me an email, give me a call. We'll do a Zoom or a conference call, and let me answer any questions you have. Let me send you some deals that we've funded. Let me send you information on our paperwork. If you have an attorney or a realtor or a banker or a neighbor or somebody you want, let's all get on the phone and let's go over this together, because I really want people that are well-informed, people that are going to be consistent lenders with me for years to come. So I want to work out all those things in the beginning, answer all your questions, start with one deal, and when that deal goes right, we'll move on to the next one. So if you want to connect, give me a call at my office number here, or there's my email, and then you could visit our Better Way Investments website. If you got any questions, let me check the chat box. If you got any questions, type them in here. If not, you can contact me after the webinar. And this is really the end of this webinar. So I want to thank you for taking the time. I will make this available. You'll get a free availability in about 24 hours to rewatch it or send it to somebody you know. And I look forward to working with you. Have a prosperous year and have a great day. Thank you.